Andrew Holland is with us, Chief Executive Officer at Avendus Capital Public Markets Alternate Strategies. Andrew, good to have you with us here. Thank you very much for your time. So a lot of people who track price action, technicals, and since you do a fair bit of sort of renting and trading and in your fund as well, I'm assuming you watch that kind of thing. Which way is momentum flagging now, Andrew? A little bit. Are you starting to see first signs of that for indices here and indices out there in the US as well, which have remained remarkably stable? But last night we saw the first indications of some worries creeping in. Your thoughts?
Yeah, I think there's a technical kind of upside to the S&P if it breaks a certain level, but it just keeps kind of going above it and then very quickly falling below it. So you're not getting that extra momentum, from global markets at the moment, to push us higher. In terms of we get the tailwinds from global factors or global markets. So I think that's where we are at the moment. I think that the problem we have is the volatility is going to remain a little bit higher than usual because of this debt ceiling talks and impasse we have at the moment. So yes, they're probably going to the brink. Yes, well, they'll probably have a deal, but they'll keep us on our toes in between time, and that's just pushing bond yields higher, globally, which is never a good sign. And obviously that could have an impact, unintended consequences again of pushing it towards the commercial real estate market in the US. So I think there's a few factors here, right? One is if the debt ceiling negotiations are favourable, which we expect they will be, and the Fed do a skip, and this is a new narrative now, we're going to skip making a decision on the next Fed meeting on June 13th, 14th, then the markets will start again thinking about interest rates falling by the end of the year, because a skip is the next stage is to say pause. That's for sure. He hasn't quite gone there yet. I think that's what markets will like, and that's why we've been seeing emerging markets do well and the flows coming in to India as well as a part of that.
Andrew, the trick to making money in a market which is absolutely flat and consolidating is getting the call on the banks and IT right. That's where, the maximum weightage is. So what are your thoughts on banks and IT from here on? How should one position themselves from current levels?
We like the banks, and I think that's if we're right that the RBI will cut interest rates in October of this year, then banks is the place to be. Yes, there's going to be kind of consolidation or falls in between, but I think by October time that the banking sector will be a lot higher than it is today. So the banks is the place to be. With IT, I think it's had a reasonable rally over the past few weeks, and I think that's on the back of obviously Nasdaq moving higher. But the fear I have about that, it's not necessarily that the tech stocks in the US are doing that well. They're laying off lots of people, but what they're doing is using their balance sheet strength to increase dividends and give shareholders more money. So it's not really the growth prospects for the tech sector which have improved, and obviously our stocks have followed on that tailwind because the correlations are quite high. I still think there's a quarter you can wait before buying IT. If you're convinced that interest rates are falling in the US by the end of the year, then that timing you can do it now. It doesn't matter for that 5%, but I think if you want to be a little bit more assured, and wait for more earnings downgrades from the IT sector, which are surely going to come.
All right. Hi, Andrew. Good morning. Nigel on this side. Last time we chatted, I was still hoping that Arsenal lifts the Premier League, but unfortunately that didn't happen. So condolences to me. Sonia is not in today, but the last time we were hoping quite a bit. But talking about the markets, give us an insight. How are you all positioned? The long short positioning, have you tweaked that in the last couple of weeks or so?
Yeah, well, just on the football side, the collapse was quite remarkable. So I don't want to rub it in too much, but in terms of the positioning, we're quite neutral at the moment because we think the markets have run up quite nicely. We are more constructive on markets going ahead. Don't get me wrong, we're not negative anymore than we have been. So we would be a buyer on dips. We just feel that there's, so there's a few headwinds out there which are still to emerge with higher rates from in the US in particular, and any kind of drag on the commercial real estate because of the credit crunch that's going on in there at the moment, not just because of the debt ceiling, but because of banks not lending or tightening their kind of regulations in who they want to lend to. So I think there's a credit crunch going on there too. So I think in the very short term, we might be in this trading range for a little bit longer with a little bit more volatility. But I think the prospects are more brighter going forward than I felt for a long time. So more constructive. So just weaving our way through a little bit of this volatility and keeping a more of a neutral stance.
Andrew, markets always have this flavor of the season, right? Sometimes it's railways, sometimes it's defense. Now these electronic manufacturing companies have been doing very well, reporting very strong numbers, solid order books. Can you tell us some niche themes or sectors that you like, which you think is still not appreciated and discovered by the markets, but where the underlying is looking robust?
Yeah, I mean, electronics is something I've mentioned to you in the past as being something which I think will be huge in not just in India, but for export markets too. So that's a growth story which is only just beginning. I think the other story which I think is still being neglected is the beverage industry, and I think I'm not just talking about alcohol; I'm talking about soft drinks as well. Where I think the premiumization of the whole industry is really taking hold. And I think that's going to bode well, really, for profits and margins going forward. So I still like the beverage industry. I think that's just at the cusp of moving a lot higher over the next 2 to 3 years.
Okay, all right, Andrew. Thanks a lot for joining in and filling us in with your quick take. Wishing you a good day ahead. Well, time to